Hi Valentina, we are super happy to have you here in this new session of ChatGPT Tax. So today we're going to talk about third-party ManCo and their tax function with you. So can you please tell us more about you and what's your day-to-day look like in this function?
Sure, thank you. So first of all, thank you guys for having me here today. It's a pleasure to be here, and actually have very nice offices here. It's my first time being here in Bertrange, so very nice, and the baby food and the billiard gives a very nice atmosphere.
You're the first one complimenting the location.
You see, that's why you have me on the podcast, right?
Exactly.
But coming back to your question, so I'm heading the tax function within our third-party ManCo, and I'm very happy to be here today, actually, to exchange views with you and to share the experiences we do face, as well as challenges, obviously. We do change as internal tax function within third-party ManCo. So yeah, happy to be here.
What is the tax function in the ManCo and in AIFM? What do you do on a day-to-day basis?
So you come in the morning, you grab your coffee, you open your Excel files. No, but jokes aside, I think if I may take a step back, a lot of people have been wondering, do you actually need a tax function within a third-party ManCo? Like, what do you do, guys? Like, and actually, that's your question.
Yeah.
What are you doing? So we are taking care of the tax governance internally. So meaning we are not in charge of the tax affairs of the AIFM itself, but it's really more about governance when we onboard our clients. So we work, but careful here, we are not providing any tax advisory services, because this is something under the regulation you're not supposed to do, you're even not allowed to do. As an AIFM, under the IFMD and IFM law as transposed in Luxembourg, the only tax services you may provide is assisting with tax compliance, reporting, this kind of stuff. But at no point in time, I will be involved in structuring transactions, deals, advising my client, hey, put an SPV there, or do a bank loan here, or whatsoever. That's not going to happen. So to come back, what am I doing on my day-to-day basis? We assist with the onboarding of our new funds. So we review the PPMs, we review the tax structuring memos, and we have a big oversight function, meaning oversight in terms of any obligations, tax obligation, obviously, the fund may face when he's working with us.
Who is your main counterpart on the fund side? Who do you interact with? Does that limit to the moment of the onboarding, or do you have subsequent ongoing interactions with the GP?
So tax is everywhere. It sounds scary, actually, but it isn't. Because when you think of a life cycle of a fund, between the initiator who comes up with the idea to launch a fund, then chooses a jurisdiction, then does the capital raising. When we speak capital raising, you speak about investors, you speak about investor tax reporting, you speak about FATCA, this kind of things, withholding taxes. Then you start to do the transactions, you start to do the investments. There is actually all the nitty-gritty is happening there from a tax perspective, because you need to make sure how you're going to structure your investments, that they are efficient from a tax perspective, right? And again, we are not going to be advising on this, but we receive this information and the advice from the GPs or investment advisors who come to us with a recommendation to do a transaction. And then you have obviously also the exit. So depending, it's going to be either during the divestment phase, where the asset's going to be sold, their tax as well. We need to make sure that the sale is happening at arm's length, obviously, or if it goes into a continuation vehicle or whatever kind of exit there may be, tax is everywhere.
So basically, you make sure that things are done the way they should be done from a tax perspective.
I'm the police. The tax police.
Exactly. But one interesting thing, you said you reviewed the memo at the beginning when you launched the fund. Would you also request memo if, for example, in the case where the sponsor doesn't need one, would you be the one requesting for a new one? Yes?
Definitely. So this is how we have set up, because in the end, if you don't have a memo, and again, we are not doing the tax advisory services themselves, and you cannot expect, be it an internal IFM or an external one, because the law does not make any distinction between both of them, right? You cannot expect to have like a full pack of 20 people, 20 tax partners sitting there. That's a huge cost, because it's not a service you sell, so you are a compliance cost in the end. You cannot expect people to have all the extensive knowledge. Maybe a guy from Luxembourg is supposed to have the knowledge of the Luxembourgish regulations and how it works in Luxembourg, but you cannot expect the same guy to have like a network as law firms have, as Big Four have, and to know everywhere in every jurisdiction. So yes, you do request memos. You just try always to streamline as much as possible when we work with clients. Obviously, if you do copy-paste of your structure, you have always the same investment pattern, I'm not going to request 20 times the same memo.
No.
Makes no sense. I'm not happy to review them. There's no added value. Makes no sense. So we try to streamline, review once at onboarding, and then negotiate terms on a transactional basis.
Considering today's environment, globally speaking, where do you see the key point of focus from a tax risk perspective in order to ensure that you have basically de-risked the AIFM
Yes.
position and
Yeah.
your client down the road?
Yeah, I think there are two good words here. You have obviously the risk assessment, so the identification of the risks, and then you need to mitigate them, right? Go both hand in hand. You cannot identify risk and then say, whatever, I don't care, I'm not going to do anything with it. Maybe some people do, but we try to avoid this. So I have the risk identification and the mitigation of the risks. Where I see the risk today is that we still have some cowboys on the market. So not AIFMs, but really clients.
Do you really see that?
Yeah, unfortunately. You have still some guys who say, yeah, but I don't care, I'm not going to provide a memo, like I do whatever I want to, and you're like, guys, that's not going to work. We face this as well, especially, I don't know what your experience is, but when it comes to AML KYC, they don't have the same regulations we do have in Europe. And this is sometimes where you have sponsors, initiators, where we struggle with them to explain, guys, but you are working with a fund in Luxembourg, so you need to comply with the Luxembourg regulation. And we are an AIFM, we are supervised. And through us, you are indirectly supervised. So things go hand in hand, and be it for tax or for, because if we speak about tax, you have Pillar 2. What's going to happen with Pillar 2 for the United States? So if one day they're going to tell me...
globally speaking as well. Yeah.
As well, yeah, that nobody knows. So I think when you speak to the GPs and you explain to them what do you need and why you need it, most of them say, okay, makes sense, because you really clearly explain. It's not about, the purpose here is not to collect memos for the purpose of collecting them, put them on a shelf, never take them out again. So if you explain where the risk lies, because I think one thing people tend to forget is we have do not tend to forget that we have laws in Luxembourg, but tend to forget that we have two circulars from the CSSF here. One's from 2017, one from 2020, which clearly say that tax risk is a tax offense, means jail, means criminal offenses. The consequences can be very, very heavy. So often people tend to forget this, and then they are reminded of it when something explodes.
Yeah,
but when
up.
it explodes, it's too late.
Too late.
So we try to not get to this point.
Do you see a difference in the, say, approach from the GP, depending on whether they already have a tax function within or not?
Yeah.
Does that make any change in the relation and the understanding, the fast tracking of, the understanding of the situation?
And also in terms of location, I mean, European GPs, US GPs.
Definitely. So you have the bigger players, they often have already internal tax functions, right? It may be bigger teams, it may be smaller teams, it may be teams who are more focused on compliance, on reporting, less advisory. This is why I think I have never seen, since I've been with the ManCo now, I've never seen a tax memo produced by the fund itself, okay? Regardless of the size, because we have some of the very big names with us as well. I never saw that. It's always going to be a big four, a law firm, a boutique law firm, whatsoever. So even if you have an internal tax function, it's not the guy who's going to write you the tax memo, because again, I think it goes back to what I've been saying before. There's so much knowledge, so much details on portfolio side, on investor side. It goes dans tous les sens, as we would say in French, and it's just impossible to have like 2-3 people managing this.
Yes, and also I guess probably also in terms of own responsibility, you prefer to delegate certain aspects to make sure that you're not missing something. But what kind of risk do you identify? Basically, just speaking for tax, is it 8.2? Is it Tax 6? Probably both of them. Are there additional topics that you see in, let's say, on a recurring basis?
I think these are fair. Pillar 2 is an issue.
Yes.
8.2 is a topic. Tax 6 is a topic. But for example, 8.2, to be honest, the way we see it, the way it has been structured now, the way our clients are dealing with it, I don't know if you have noticed it on your end, but on the subscription agreements, they used to be 100 pages, now it's 120.
Yes.
This 20 additional pages.
You have the
are
exhibit
tax.
for 8.2, but it's basically, I think, also an additional topic to cover. Have you seen from your experience a lot of issues arising from it? Obviously, you need to do the analysis, but I would say for most funds, they are able not to be tackled by those rules. So it's obviously something you need to have to bear in mind. It's something you need to consider when you structure it. But like, I would be curious to know, in terms of, from your experience, of concrete risk, what is the percentage you really have on 8.2?
It's low. It's low because clients are very well educated when it comes to the area, most of them. This is another thing I've thought of saying, it's the risk is also education, because
Yes.
depending on the size of the GP, depending on where the GP is coming from, he may be more savvy or less savvy when it comes to taxes, be more aware, be more risk adverse than others. You may have cowboys say, whatever's going to happen is going to happen, and then once it happens, we will solve the issue, or we will pay the fine if there's a fine to pay. Others say, no, we don't want any fines, we don't want any issues. If you tell us this is important, then we're going to do it, because in the end, you're kind of guiding us. Because through our function, what we are doing, obviously we are covering ourselves, okay?
Yeah.
Because we are supervised by the CSF, we have the DAX 6 law from the tax authorities. I think this is maybe a good point, because we have two organs supervising us, right? We have the regulator, but then we have also the tax authorities. And then even the third one, tax authorities, direct tax authorities, indirect tax authorities. So there are actually three that may come for us, if I may say so. And once you explain this to clients, they say, okay, we did not know that there is actually, we thought you're collecting for whatever reason. Said, no, we're not collecting for the purpose of collecting infos. There's regulation in place. We need to cover us, because we have, I'm subject to this regulation, right? I'm a Luxembourg-based AIFM, I'm subject to this. But by covering me and protecting myself, I'm also protecting you. Because in the end, who's gonna be in the news? It's not me, AIFM, the evil one. It's the client who will be accused of whatever allegations, tax fraud, embezzlement, whatsoever may happen. So it goes hand in hand.
That's
My
a very good
reputation
point.
with the client's reputation. And once you explain this, then they are,
You were referring earlier to, I think, the 2744 around all the tax aspects.
Yeah.
Where I wanted to transition to was more on the portfolio management side, and whether this directive, in the frame of having delegated the portfolio management versus housing the portfolio and performing itself, does that change anything on the way you approach the tax risk and the methodology on how those are being assessed, actually?
Yeah, and I think that's a fair point. So obviously when you have portfolio in-house, you are more hands-on. You receive more documents, you review more. But it's also what people need to understand. It's not when you outsource portfolio management, so when you have a delegated mandate, right? That you say, like you have the 3 A's, pas vu, pas pris. No, it doesn't work like this. You still need to do your due diligence. You still need to review, to receive a bunch of documents and receive a bunch of confirmations. Be it QIA, so know your asset, where you need to do a bunch of AML KYC screening on the assets, on the seller, on the buyer, all of these things. Because I'm not aware, a lot of other jurisdictions are not that pushy on this. We are very pushy, and this is where, when I say we, it's not me, it's our industry here in Luxembourg, the CSSF, and this is also where we see a lot of pushback from clients when they say, but we never saw this, we don't understand this, where is this coming from? So there's also all this education to be made. But to come back to your point, obviously if you have portfolio internally, then you have more information at hand, so you can do more assessments. You will rather receive a tax memo, or you will be more in, you will have more power or more influence to request a tax memo, let's put it this way, than if you have a delegated mandate. So obviously having portfolio internally, you need also to have the resources. It's not just to say I have portfolio internally, so I get more AIFM fees as well. You need to know what you're doing. But yes, if the distinction is very clear in terms of the risk is higher if it's internalized, because you see more, you do more. But it's not because it's delegated that you can wash your hands and say, pas vu, pas pris, as we would say in French.
You're still responsible at the end of the day.
Definitely. How do you, so the IRS?
Oh, no.
No? Not the IRS, no.
No, I think the IRS, they are, by IRS, I think the most thing I could say to this, it's really with respect to FATCA, obviously.
Yes.
But when it comes to FATCA, and it's actually very, I could even say, I wanted to say funny, but it's not really that funny, because FATCA is something standardized now today, right? It has been around for roughly 10 years.
10 years, yes.
Everybody knows what FATCA is, everybody knows also what CRS is, they go hand in hand. You know it, you do it, but you do it. Do you do it, yes or no? Because what I'm struggling sometimes to see as well is when we start a new relationship with a client, obviously we collect all the AML KYC documents, right? And one of those documents is our standard FATCA CRS self-certification. And it's not only enough to collect it, you need also to check it. Does it make sense? You cannot tick the box here and then not tick the box there, although you know those go hand in hand. So between collecting documents and then reviewing them, there's a big gap, and there's also a big education to be made. Because again, if you collect stuff, but then you're not able to spot if something is wrong, and one day you have an audit, and as we all know, for the moment in Luxembourg, we do have a lot of audits when it comes to FATCA CRS. providers are being audited, funds are being audited, so reporting financial institutions, but as well as non-reporting ones, because they need to demonstrate why they consider themselves as non-reporting. So without going to the details of FATCA, this is something actually very standard and very standardized and more an administrative task as of today. I would have thought, but when I started in the industry, so when I came from consulting to the industry, I was quite surprised to see the gap there is between the knowledge, collection of documents, checking the documents, and then just being able to push back to the client, say, hey guys, this is not okay, this is missing. Like, I need a new one because we cannot onboard, we cannot close the IML KYC file.
Thank you very much. It's, I think, a lot of information. It was very insightful. Thank you, Boris, and for all those watching, stay tuned.
Thank you.